What's going on, guys? All right, today we're going to talk about the most profitable and proven intraday trading strategy. Now, it's a rather simple setup. I'm going to show you guys how to enter the trade, how to manage the risk, where to take profit. And yeah, you're going to learn a lot. It's action packed. I'm just going to give you the basics and then we're going to add layers to it. Layers that can be found only at trade1340.com. However, you can get started in developing the confidence and the bias necessary to be a profitable trader using this simple setup. So let's get right to it. Plus, I'm going to give you a free indicator. So make sure you guys like, share, subscribe. I'll include the link to the indicator down in the description, also pinned into the comments. And please, 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 let's start a conversation in the comment section. All right. So here we go. We got a standard looking chart here. Yeah, hardly anything awesome here, right? It's like, what the hell is the market doing? Now, there's a couple of things I want to do. First up, guys, you need trading view. There's a couple of things that you're going to need as a trader. Number one, trading view. This allows you to connect to your broker, whether it's Webull, AMP, Tradeovate, Interactive Brokers, whoever your broker is, right? This is going to be, I guess, the middleman, right? Where you can put all your fancy drawings and, execute your trade. So that's step number one. Step number two, to prove this out, guys, look at, your setup might seem, I guess, committing in the beginning, right? So you need trading view and then you need TradeZella. Now, TradeZella, guys, is a journal. You'll be amazed how many traders don't have a journal and don't have their own data. You cannot trade without data. Why? Because then you're trading on emotions and trading on a hunch and trading on a I feel notion. We don't want that. So again, trading view. I'll put a link down in the description. Non-affiliate links, guys. I'm not making money off of this. So it's trading view and it's TradeZella. Okay. Now let's get back to the charts here. What I'm going to do is we're going to go to indicators and we're simply going to search for EMA. And that is going to bring up in the technical section, moving average exponential. Awesome. So we're going to add that. Now, I'm going to click on the indicator. I'm going to Control C for copy and then Control V as in Valerie, for paste. Okay. So now we got 3 EMA indicators there. What we're going to do is we're going to change them up here. The input here, this is going to be a 13. And we're going to change the style, make it a little thicker. This will be green. Thicker is already never right. We're not going to go there. Okay, so here we go. We click OK. So we got the 13 EMAs green, and then the 48. We're going to change the second EMA. This here, the 48 EMA. We're going to change that color to red, and we'll make it slightly thicker. And we're going to click OK. All right, that's done. Now, the last EMA, we're going to change this to the 200, right? Now, the 200 EMA is going to be our bias EMA. And let's change this to yellow. And we'll change the thickness ever so slightly. Okay, so there you go. That's our EMA setup here. What I'll do, guys, is I'll have this set up. I'll also link to this chart in the description for you. Okay, so if you're too lazy to go ahead and do these settings, then you can just go grab the chart. All right, so nothing too crazy here, right? So what are the rules? Well, rule number one, if we're below the 200, which is this yellow line, we're simply looking for price action to be below the 13. That's what we want. We have this area here where price action breaks to 13 into the 48. This here is a no-go zone simply because we can have a rejection, right? So trading into the 13 is a no-go when we are below the 200. Now, here we go. Price action is now above the 200. And what we see here is the 13 is also above the 48. this green line here above the red line, which is the 48 EMA. This means that there's bullish momentum. Now, we can go ahead and zoom out and I could show you guys how this works. As you can see, we have the cross here. We break below the 200. That governs our trade here. We do not take the trade into the 48 or the red line here. Maybe we play the break of the 200, but we still don't have a 13 cross here. So the trade is not necessarily valid. However, we do have a 13 cross here, and we do break the 200 EMA. So this is a bullish trade. Okay. Now, there are countless examples, guys. What we want to do is make sure that we're able to execute the trade relative to the rules. And typically, what we want to see is if we are bullish here, guys, we want price action to be above this green line. If we're bearish, also not only above the green line, but above the yellow line. This is the 200. This governs our bias, right? So as long as price action is above the 200 here, we're simply looking for the green line to cross above the red line, and this builds momentum. What about the cross down? Hey, Gabe, we have an area here where it crosses down into the 200. Well, because price action is above the 200, you're essentially creating counter trend. You're creating a counter trend trade. Now, what this means is you're exposing yourself to a less than optimal setup because you're trading against the trend. Okay, so that's what this is here, right? And then how do we avoid chop, right? Again, simple rules. If you want to go long, make sure price action is above the 200 and also above the 13. Never trade against the 200. Always trade away from the 200, right? Here we go. So it's away from the 200 up here. We see here, it's away from the 200 down here, right? We don't trade into it. We trade away from it. Make sense? All right. So guys, let's get right into it. I'm going to show you the indicator that I use, or the free indicator that I'm giving to you. Of course, you do need TradingView, and that indicator is called ChopX. Now, I'll include this link in the description, right? And once you click this URL, you want to add the indicator to favorites. Okay. Now, let me show you what this indicator is. Really, really quickly. It's going to save you a lot of headaches, especially since ADX is a volume and strength indicator. We've modified it so it's color coded, and let's get right to it. So I'm going to go back to the charts here, and I'm going to add a personal indicator because it's a personal indicator of mine, which I'm sharing for you absolutely free. Okay, so the question here is, do we have momentum? That is the $1 million question. With price action being what it is and just breaking the 200, do we have momentum? Well, what you could see here is we entered a chop zone right there. You guys see that? And then I want you to pay attention to the ADX or the ChopX here. It's a color-coded ADX, rather. You'll see that it is red, which would tell you, hey, don't take a trade. Now, it's working its way up into this zone here, which is a caution zone. That's why it's yellow. As you can see, we get the caution zone before we get into chop. And so we're looking for the caution zone before we get into bullish. Now, we cannot assume that we're now making a run, right? We cannot assume that it's bullish. Now, this indicator does not tell you the direction. It simply is a gauge of strength. The direction is here, as you can see, right? So we have 13 cross below the 48, and now we have strength at or about here, strength in that direction, taking it south. Now, guys, this is going to work on futures. This is going to work on stocks. This is going to work on options. And essentially what it's going to do is it's going to help you target your 1%. Now, 1% compounded, we see a lot of YouTubers out there talking about how, yeah, hey, you gotta make 20,000 in a day or 50,000 in a week, but mathematically, what does that equate to? And what is that $50,000 relative to port size? The thing that most people don't understand is that a 1% compounded can 11x your port in a year's time, right? So 10,000 turns into 110, 120,000 after a year compounded. Now, the argument, right? The argument some will say is, well, it's impossible to compound 1% daily. Well, it's a goal. It's an ideal goal. But this is also going to keep your risk relative, right? So if you're targeting a 1%, your risk should also be 1%. Now, this is a one-to-one. This is where most traders need to start because traders do not have an understanding of risk to reward. They're just worried about wins. So when you worry about wins, yeah, you might have a high win rate when you look at your trade summary at 70%, but your risk to reward, if you're winning half as much as you're losing, then 60, 70% doesn't matter. You're still approaching your risk to ruin and blowing up your account. So what we want to do now is we understand the system in its simplicity here. Now, what 1348 has done is we've taken this system and built layers upon it, simplifying it even further, targeting the trader's emotions and giving you the optimal setup so that you're not fancying, hey, I'm going to take this trade up because we crossed, right? Some traders will go ahead and take this trade up because it crossed right here. However, without the supplement of this indicator, which is chop X, well, you wouldn't know any better. So now we're bullish here. Guys, what I want to do now is take you on over to my system. So with the bare basics, we know that the 200 EMA we're biased to that governs our overall trend. We also know that when the 13 crosses above the 48 and is also above the 200, we take a bullish position. And when it's below the 200 and when price action is below the 13 as well, and with the 13 being below the 48, hence we have this, right? We are bearish. This is an example of bearishness. This here would be an example of bearishness right here. You make your money, you get the peak, and then we enter a chop session throughout the day. Now, what Chop X is also going to highlight, and again, it's absolutely free, what it's going to highlight is that you don't have to trade the entire day, right? Okay, that's that. You don't have to trade the entire day. So with 1348 cross and the 200 as your bias with Chop X, you should be well on your way to developing the basics as a trader without having to worry about like all the other nuances of trading, which is, candlestick patterns, technicals, market structure is my favorite thing. People talk about market structure, supply demand as if it means something. Supply demand simply means support and resistance. And, some people would like to say that, supply and demand are institutional footprints, which is an absolute fallacy. You see, institutions like to trade in the dark pool, right? After all, why would institutions tell you and I and other institutions where their money's at? Can you imagine if BlackRock really saw all of that? And maybe they can, but imagine institutions on a lit market and BlackRock saw all that money just sitting there. It doesn't really make much sense, right? So they're going to see further in this video how we use support and resistance, not supply and demand, but we're going to add layers to this. And again, we auto plot our trade designs and our support and resistance levels with our system. So let me get into my system here, guys. I'm going to show you this. This is trade 1348. Oh my God. I know at first glance, it seems overwhelming. It really, really does, right? But let me show you something. Our levels here are auto plotted right there and right here. And you can see the system as it approaches levels. Also, what our system tends to do is it removes worthless candles and worthless price action so that you're only concerned with the most optimal trades. Now, we also have a coach. This is an AI coach. And what this does is it helps you to implement good practice as a trader. Okay. Um, Again, these are checkpoints here. We ask, take the trade. Are we above VWAP? If so, we're looking for a trade design up. Okay. So VWAP would be this line, also color coded, right? In addition to the 200. And then we challenge the trade and we check the trade only if one of the following are true. It's a new trade design, which we have right here. This is a trade design, guys, with the risk to reward. As you can see, we have our risk box here. We have our reward box here in green. Again, you're not being misguided in the trade. We are showing you thoroughly what this trade is. And then we have trend tracker went from X to a colored bar. So you see, we have our customary colored bar here, market open because of extreme volatility. If we look at this candle, comes all the way up to a level and that gets rejected. And then, hey, there's nothing there. But would we take this trade with chop X showing it's chopping? No, there's not enough volume or this candle. So we have this red line here saying chill out. Now, interesting enough, we have this yellow line here. Yes, we took the trade up to a level. This sets trader expectation. One of the biggest issues for traders is that they do not have a target or an expectation. Uh, it's just, I'm going to hold on to this trade to make the most money. That's really all this is. I'm going to hold on to the trade to make the most money. So what we need to do is have some structure. If we enter the trade here, which we're now showing a candle, what do we target? Do we target the level or do we target the very next level? Okay. This is going to be rather subjective. Which level to target? It's also going to be relative to your goal. Because if you're looking for 1% or 1.5% daily compounded, well, this trade potentially sets you up to a 1-to-1 up to this level. And then guess what? You only have one more trade to take for the day where you can get your 1.5, 2-to-1. Now, before I get ahead of myself, let's talk about the rules here because a lot of traders, if you're taking more than 3, 4, or 5 trades a day, you're taking too many. You want to try to keep your trade count to 3 or less. With a win rate of 60 to 70%, which the system provides, you're going to win 2 out of 3 trades. You may find yourself in sequence of winning, 70% of your days even, right? But let's just focus at the trade level. If we're winning 70% of our trades, then we have to stay within the mathematics before we enter a sequence of losing trades, right? It's because the sequence of losing trades is what alters the psychology of a trader, and it's what causes the trader to oversize. Now, let's talk about risk management here and oversizing, because on the other chart here, you get, the bare basics. This is the 1348 chart here. You don't get risk management. It's telling me how many contracts I could buy here, right? Based on my propensity for risk. So I could go ahead and set my risk here. If we go into inputs, I could say per trade, I'm willing to risk $3,000. Now that would be, if I'm risking $3,000, then that means I have a $300,000 port. Again, risking 1% of my port value. Okay. And so then with this, I'm told, okay, based on your risk, this is your allocation for contracts, right? And this is your risk box before you lose your $2,800 or $3,000, which is going to be right here. So now I tell you where your stop should be. And well, this is a 2.6 to 1. So if I risked $3,000 and entered here, I would be up 7,500 up here. Now we get a late entry here, but I would still be up an additional $3,000 plus. If we had the late entry, per the candle revealing itself. You got to remember, up to the point at which the candle revealed itself that you see here, we were still below the 200. So it was a low quality trade, and it was a rather premature assumption to believe that we were bullish if we were still below the 200 EMA. Hence, we see the wick there. Okay, so the trade is in fact going in our favor. Now, what we see here is a multi-time frame indication of hold. Now, let me go ahead and maximize this chart here so you guys can see. So we have the hold here. Now, this hold is telling me that larger time frames are also in agreement with this trend. Now, we are in my brokerage trade of 8 here, and it looks like we're bullish. So when we look at the chart here, we have no understanding of a target. When we look here, we could see that we're above a level. We're waiting for the candle to close per this 1 minute counter here, and we want to go long. So what I'm going to do is I'm going to scale back my position. I'm going to, instead of 3 or 4 contracts that the system told me to do, because I'm late to the party, I'm just going to go ahead and I'm going to buy 2 contracts should we break this level here. Looks like it did so immediately. So let's go ahead and zoom on in here. So we got 2 contracts and Q. Here we go. And what am I targeting? Well, because I have a boatload of confidence, and because we also see that the ADX is trending up, and we have a trend tracker showing us like, hey, there's some momentum here. And then we have larger time frames, also in agreement with the general trend. What this means is I'm simply going to target just shy of this level. I'm going to bring it down here. I'm not going to be too greedy. I'm going to let the trade come to me. Now, why am I shortchanging this level? I've talked about this in many of my videos. If you guys haven't seen my videos, go ahead and check it out. My previous day videos, right? I've been uploading rather frequently. The reason why I avoid the levels is because although some will argue that's institutional footprints, no, it's actually an algo and retail trader footprint where the institutions use to find liquidity. So therefore, it's a game of first in, first out. And I don't want to get caught in the traffic here with this level. Okay. I don't want to get caught with the traffic here. So, you know, don't worry about drawing levels. That's another thing that the system does really, really well is it draws the levels for you. As you can see, we got an obvious level here. We had consolidation and a level here. Okay. So I'm going to shortchange that level. Now, one of the things that I tell traders to do is to not over-engineer the trade, meaning don't get too aggressive with your stops. Don't over-engineer the trade. Don't, micromanage the trade, right? So many traders will go ahead and micromanage this trade and instead of letting the trade develop, right? So when are you 100% wrong in this trade, right? Well, for now, we look to be 100% right. Now, for those who are risk averse, you do run the option. You have 2 options here. Let me zoom on in, right? And that is to protect your stop loss, or rather your entry, right? So go ahead, we apply a stop, and we bring it right up to our entry. Now, what this is suggesting, and you can see we have it a click or 2 above our entry. What this is suggesting is should the trade come back to me, this trade becomes free. Now we have momentum coming up to this level. You see this here is $300, and 390, 340. And all we want to do is just tap this and get out of the trade. Okay. Now, if I see something like $400, a nice round number, there you go, 500, we got the fill. Okay, so now I have to close my stop. That was a super simple, easy $500. Okay. I didn't do anything crazy. Didn't over-engineer trade. Didn't over-analyze the trade. all we did was trust in a trend and build multiple confluences here, right? Once you understand our indicators, you will see, oh yeah, this is building momentum up with volume. Trend tracker, a custom indicator found at trade 1348, is also telling me to go. Plus, I have visible candles. When should you worry? When your candles turn invisible. That's when you should worry, right? And so here we go. Let me show you guys a great example here. This was a trade down. We marked the 1348 cross, comes on down. And then because these candles go against the rules, we do not put you into this trade. We do not put you into this trade. Why? Because it's going against the general trend until it's not. Of course, right here, we then show you the candles once again, and you make your money. So what is the best intraday trading strategy? Well, I'm going to be biased to my system. It's been years and years of over a decade and a half of trading experience, 3 years plus working with engineers, developing these indicators, creating, the volume indicators, the risk profiles, everything that's gone into the system. And what we look to do is make trading simple. It doesn't have to be this overcomplicated, look at me, I know what I'm doing type of endeavor, right? That's not what I'm here to do here on YouTube. I'm here to show you that anyone can really do this. Now, your biggest nemesis will be patience, and even your own anxiety. Those will be your biggest nemesis. When we trust the trend and trade the trend, there's absolutely nothing you can't do. Now, what we see here, I want you guys to see in real time, just that level. It came up to the level and now we got a slight rejection. And this is why I short change levels. So I could stay away from all the orders that get executed around here. So that's pretty much it, guys, for the best trading strategy or the best intraday trading strategy out there. It's super, super simple. Let's go back to the other chart here. And let's here again, it's as simple as a 13 crossing to 48. And then the bullish thesis becomes valid when price action breaks above the 200, right? Or the 13 crossing below the 48 and the thesis becoming valid once price action breaks below the 200. Of course, you got the free ADX indicator to let you know when there's strength in that move. We also see we got some strength here happening right now in this move on NQ. So what does that mean? That means when we look at this level, and I'm going to bring it back to the other chart, guys, I'm showing you guys it's what this means is now that we're at this level here, let me show you really quickly. I could go ahead and just buy more and let's make this a quick scalp, right? I'm going to target halfway up. Now, what the market likes to do, guys, is it likes to find areas of freedom. Now we see level upon level upon level absolutely stacked. They're stacked, right? What we want is a little more freedom here. And we could see here the last area, this zone here, there's far more freedom between the levels than there is right here, right? So this would be a higher probability zone of which, guys, you see it's definitely paying me. Well, it was. And what I'm going to do is I have the expectation not to get to the next level, but to maybe get halfway through. Okay. So that's what we're going to have there. Now, when is this trade absolutely wrong? Well, guys, the beauty of the system is it gives you an objective zone area as to which the trade is wrong. And that objective zone area is when this candle breaks below this band here, right? Breaks below this band because, and this is your green band, right? This thick band. The middle line here is what we call the STB line, which is our cautionary line. But the band right here, once price action breaks, we know objectively we're wrong. And what we have here is bullishness. And I'm not going to be mad at that. If this is going to be a scalp for an extra $100 or an extra $200, I mean, what that means is I made $600 to $700 in a day. all while teaching you something stress-free. So here we go. We were up $170, guys. We were. Um, let's go ahead. Well, we have a full allocation, potential full allocation of 4 for the origin of this trade. So we're trading rather small relative to my own profile. Okay. So I'm not really worried too much about this. Again, this trade is absolutely wrong upon the break of this band to the downside here, right here. When it breaks this band, I am wrong. I should change the color. There we go. Oh, that's ugly. Absolutely ugly. I hope you guys understand what I'm saying. So what this means is I can set a price alert for beneath that band and then just simply walk away from the trade and keep the market from just making me feel like a buffoon because I'm watching the trade and because I'm freaking out over a non-realized loss. Now, when it comes to risk, you want to risk 1% or less. And as you develop confidence and as you track trades a lot and you see your win rate improve, and you got to understand that mechanics and psychology, they create a feedback loop. And so when you have good mechanics, it fosters good psychology, and good psychology fosters good mechanics. And we do this over and over. So here, hey, we have full transparency here. We broke down from this level. And again, this trade, I love this opportunity to showcase this trade to you. We see here that we're not rolling until we break this band, of which then I reposition and I reevaluate the trade and possibly go short. But what I'm really doing is showing the fortitude or the mental fortitude and confidence in the system as to not fret due to candle and price action. Because guys, candles are absolute liars. Now, we're getting this yellow line here, which is a cautionary indicator, right? It's cautionary, but we still have bullishness on our larger time frames, and our chop X is still in our green zone. So what I would do, because my allocation was 4, right? And I'm rather small on my entry. What I can do is simply buy 2 more. Now, what this is going to do is help me exit the trade sooner, right? When I'm scaling in, I'm not dollar cost averaging, guys. I am scaling into my trade. You see, the original 2 contracts were feelers, if you will, especially when we're at levels. So you start small until it's developed. So there's some evidence that is developing or continuing a trend, which I could see here. There's still evidence here, right? What it also does is it allows me for an earlier exit. Okay. Guys, dollar cost averaging isn't for you to make more money. It's for you to exit earlier. Dollar cost averaging is an exit strategy. It's not for a lot of people, you dollar cost average because you don't want to absorb the loss, or your ego doesn't allow you to absorb the loss. When I dollar cost average, it's to exit the trade, right, and minimize my loss. Okay, right. So I'm scaling in to minimize my loss, get out of the trade sooner, and that's what we have here. So once again, let's see. Let's bring this up. Let's get to the charts here. And let's bring this over here so you guys can see it clearly. Sorry. It seems like my Stream Deck isn't responding. It doesn't respond well. I'm pressing buttons right now and Stream Deck is just not working. So there we go. All right. Now it's working. All right. So back to the trade here. Zoom on in. And again, I have confidence in my trend. I do not believe in candles. Candles are liars. Candles are basically noise. Okay. And so what I do, and I coach many traders, I coach hundreds of thousands, not hundreds of thousands, but I've coached hundreds of traders, if not thousands of traders, to be profitable in the markets. And one of the techniques is to focus on trends as opposed to candles. Okay. What this does is sort of kind of puts us on a larger time frame. right? So you can see here, we're now profitable thanks to patience. And so what was in the thesis? Well, we got a trade design up. We got a band pointing up on the 1 hour. Let's see what's happening on the 4 hour. Now, the 4 hour, we have an originating move here, right? This is an originating pivot point. We're at the origins here, right? Going from red to possibly green on the 4 hour, right? So we have bullishness. Now, let's go back to this trade and just watch it. Now, up 230 bucks, 330 bucks, right? Again, I was targeting it up way up here. I said, no, let's just go ahead and do this right here. Um, let's see. What we're doing is we're waiting for this candle to close. There's 8 seconds on the candle close here. 5 seconds on the candle close. 4 seconds on the candle close. All right, where do we close? Nice. We had to close above, and then we got the second print of this candle slightly above the close here. This is gonna be interesting. Now, what I prefer to see was a continuation here. That's really what I want to see. Okay, so we have one, two, and then this may be the third touch. So what I'm going to do is, since we have some sensitivity to this level here, I'm simply going to take my sell order. We're going to place it right here, and I'm just going to get out of this trade, but I'm going to get out of the trade profitably. I have other things to do. It is a Friday. I will certainly take a $700, $800, $900 day. There you go. That's it. All right, guys, signing out.